U.S. President Donald Trump has said trade wars are easy to win, but are they? And who's winning? Nick Lardy is a senior fellow at the Peterson Institute for International Economics. Here's what he told CGTN's Guan about Washington's trade tactics against Beijing.
President Trump seems to be a big advocate of, using the stock market performance as a justification to launch this trade war. How do you look at that assessment?
I think using changes in stock markets as a justification for policies is a serious mistake. Sooner or later, there will be a correction in the U.S. stock market, and is President Trump going to take credit for that? So I think it's not a well-founded strategy. And the stock market has declined periodically in China. I think stock prices in China are primarily driven not by underlying economic activity, but by perceptions on the part of retail investors of what's happening to liquidity. Remember, we saw a huge correction in the Chinese stock market in 2015, but it had absolutely no apparent effect on the real economy. The real economy continued to move ahead. And we may be seeing the same thing in 2018.
Some Washington strategists believe that the Chinese economy is slowing down and therefore the U.S. is more likely to win in this game of chicken.
I think that's a fundamental misunderstanding of the dynamics of the Chinese economy. The indicators that are sometimes pointed to would be weakening retail sales, but overall consumption demand remains quite strong in China, and retail sales data do not include expenditures on education, health, travel, recreation, and so forth. These are increasingly important items for China's huge and still rapidly growing middle class. Similarly, if we look at trade data, we see China's imports in real terms are growing at more than 15% this year, and they continue to be very strong. It's not declining or softening. And in every economy, including China's, the main driver of imports is the growth of demand, the growth of domestic income, and that is not weakening, and import growth in China is among the strongest of any economy in the world. So maybe the Chinese economy will slow down, partly because they're tightening credit, possibly because of the adverse effect of tariffs, but I don't think we're seeing much reliable evidence yet that the Chinese economy is slowing, and I think it's a big strategic mistake on the part of the United States to assume that China is going to capitulate because its economy is very weak.